Hello, 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 everyone. Happy Fed Wednesday. So, fed up or fed down? How is everyone doing? Big debates all going on this morning. Tim Ross on Twitter. Everything's a pivot. Three things could be a pivot. Everything could be a pivot. Let's just pivot. Hey, Grand Rising, Christoph. Good morning, Patrick. Hey, ho, hey, Waka. Yeah, data good equals bad, bad equals good. We're upside down world. So, is it really? Konovic says today pivot, or what does or McDonald mean? I don't know what that means. Uh, well, today, there's 75. If they were to do 50 with the PCE numbers being that high and everything else and employment still very low, we might as well all just jump on the rally bandwagon. They're not going to raise 100 points. They're not doing. It's not going to happen. Not going to happen. We're going to do the 75 and then the next thing, so that's baked in. Then the next thing is going to be it's going to really be the press conference. Right now, unless something major happened, the 25 for December, it's really the toss up between the 50 and the 75 for December. That's going to be the big thing from the press conference. That's going to be it. So, if you are new here, please consider subscribing, ringing that bell, and hitting the likey Mikey button. Hopefully, Bob will be on after the close today for his recap. With that, let's get straight to what's going on. Good morning, Anissa. Oh, there you go. See, Christoph's got it. We're on the same page, and I'm not just saying that because you agree with me, but that is pretty much what is anything else other than what Christoph says. It would shock the markets either to 100 or to 50. And the whole thing's going to be, does it go more dovish and then we rally, rip your face off rally? Does it go more hawkish? And then we're still on the 75 for December. Good morning, Sterling. If car sales are any indicator, the consumer is still shrugging it off. Hey, Sterling, did they get rid of the 2023 Toyota Sienna hybrid thing, where you had a battery in it? Did they get rid of that for Toyota? Let me know. 75 not baked in. 75 is baked in. What would it be if it's not? Because they're not, the odds of a 50 are very low. Good morning. And you know what? If they went 50, you might as well just prepare for the rest of the year. Rip your face off rally. Let's see. Do you think it's 75, 75 and look at the data? Good morning, Andrea. Hey, Chris. Good morning, George. Do I think we'll run or head down? Yes. It's going to be volatility. I would, after the dust settles, unless they are super, super hawkish, ridiculously hawkish, we will probably continue a rally after the volatility. The volatility, if it dips, it's just how big. Unless it's super hawkish, we're not going to break some key support levels. Thank you. Don't use the P word until... That's very right, Sashi. Can't wait for this Fed day to get out of the way. Here's the thing. We got Fed day today. We got payrolls we got non-farm payrolls Friday. Next week, which is going to matter, are the elections. They're only the U.S. elections. However, it's going to get interesting, and I don't know if it'll be resolved in one night. That's going to get interesting. Then we have inflation numbers on the 10th. And we're still in the midst of earnings season. So, we're not done yet. It's not peaceful yet. Oh. Well, we'll get to the chart in 1 second. Why would I think a rally would be in unless they're super hawkish? Because that's pretty much what the patterns still say. I got to go with the patterns until the patterns disappear. The Sienna for 2023 is still a hybrid. Is it a plug-in or just a hybrid? Let me know that, Sterling. You know what? I might have to go down the minivan route with all these dogs, and there's more and more getting abandoned, and I might need a bigger vehicle to load in more dogs with, so I am actually looking at minivans. My wife, who said we will never get a minivan, actually said, could you look at minivans? Easier to get the dog in. The dogs. Oh, boy. Everything's about the dogs. By the way, mortgage applications coming out, negative 0.5. ADP minor number, but still holding up above forecast. We got crude at 9:30, so if you're an oil trader, do not ignore that. Big thing, 1 p.m. Central, the rate decision. Yes, we will get probably some minor volatility off the rate decision. The bigger thing's going to be the press conference, and it's going to hang on everything. So it could be multiple aspects of back and forth. That's where we sit. Pre-market, pretty much a mixed bag. Nothing major. Apple's pretty much the biggest thing pulling back. Amazon up slightly. Google up slightly. Microsoft up slightly. From the big boys, oil is mixed. That's where we sit there. Defensive and financials are down as a sector with industrials and technology minor. Basic materials is leading the charge up so far. We already went through Fed Watch. Gamma is shifting so friggin' rapidly, it's ridiculous at this point. So we can't, it can shift multiple times a day with the short-term options going off. And we're still in greed mode. What does that mean? We're watching for more of a topping pattern. CVS, last time I checked, was slightly down. Paramount was down big. And I did look at Humana. I think Humana was a beat. I've been too focused on other stuff this morning. There was not a lot of big things. After the close, separate from the Fed, I will be peeking in at Qualcomm. Roku, I don't know why it's even here anymore. Robinhood's a joke. Etsy doesn't matter. So that's where I'm looking this afternoon, just for Qualcomm. Here's where we sit. I wanted to go over something really quick from a teaching perspective. Here you had the double. Here's the double confirmed and not triggered. And I was watching for the 1 hour because it was a 1 hour formation. But if you were going to the 15-minute, no close. 5-minute, even if you were going into the insane 5-minute, no close. And I don't even know about the 1 minute. But why am I showing this? Because if you're going off of this, confirmed but not triggered, what invalidates the pattern? You can pretty much use the stop level. Closed below 62.5 and also traded below the 830, 859. So that invalidates the upside pattern. Just wanted to show that. What happens if it is confirmed but not triggered? Well, that's why we also wait for the trigger, because you see way too many. The probabilities drop massively if you don't wait. Yes, you will miss some, so you can always do momentum plays on a key thing, but this was not momentum. And I like to teach people to wait for the close, even if you're better to miss a trade than get sucked into too many bad trades. Right now, the short-term probabilities, I'm really going to be watching this 38.46 area off the open. We'll probably stay in choppier mode up through the Fed decision today. So would I recommend, for most people, do I recommend trading it? No, I recommend keeping the larger term perspective. So I'm going to go focus on the larger term perspective. So far, 2-day orderly pullback, sitting just slightly below the 3870, major support 3800. There's still a fair amount of longer term gamut, 3,800 rising rotation zone. What shifts it into, if we have something shocking and much more disastrous, not even for today, because some people might just tune in for today and then walk away. I'm going to let you know the key level based off of this. The key level I will be focused on, 36.6175 on a daily closing basis or a trade below 36.0850. Yes, it's a long way away because we don't have a key topping pattern besides this little minor one, but we have the daily rotation zone in the way. So that's the only thing that really would break, because it would break this key prior resistance becoming support, validated here as support, and then the launch pad. So that is a very key area. Then below that, you have support at 37.61. And below that, you're at 36.86 area. There's a lot of support to chew through. Cycles heading down to the bottom, but not yet there on the daily. And weekly still getting to the top, but not rolling over yet. This still has room to run. If I had to bet, and again, the only reason I would do this is a short little, some quick volatility to the downside, and then a continued push higher if the key support holds. And that's not just for today. We could even pull back today and then resume the short-term launch pad up. Still no close above the 62.5 on the S&P, which is my favorite one because it tests out the highest. NASDAQ, which never really had a double, still sitting in horizontal. We're getting the buying pressure still below 11,314 on the closing, and any dip below 11,300 is still being bought. On a sell-off, I'm watching 11,238. Volatility to the downside, I will be, unless this pattern gets invalidated, I will be focusing on back to 11,109 for volatility to the downside. Volatility to the upside, I will be focused on these most recent high topping pattern areas. Back to the S&P real quick. I did not go over the upside. To the upside, the first little level would be about 39.07, 39.23. Then the next cluster is 39.45 to 39.45, 47 volatility upside. And the levels have not changed, 39.66, 39.86. After the 38.20, then it's just the daily patterns. Sorry for jumping around a bit. I realized I didn't cover that. The major support would be that 3,800, and in all out from the bull side disaster mode, 37.54. Doubt we'd get below that today unless it went, and I doubt we go into crash mode. Remember, the NASDAQ has not broken its key thing. So to downside, my major supports coming in at 11.55 and then 10.953. 10.953 on a closing basis is critical. Should we take the dump path, 10.953, a close below there, then I'm going favoring the return to the lows. To the upside, upside 11,412, then we're into the clear path. So it's a clear path to about 11,602. Then you can use some reverse harmonics above there, but 11,664, 11,710 to fine tune it. So those are the upsides. Let's peek in at the S&P and Dow for all those, the spiders and the Dow, the Qs, sorry. Head's a little all over the place. Slight gap down today. Major support on the spiders, 378. 378. If you break below 378, major cluster 374.54. Minor support coming in at 381.50. to the upside. To the upside here. Right now, we're trading below this level. So first level of resistance would be about 385. And then 386.30. So do not, also, I went over to major one, 378, but do not ignore right around 380. I'm bumping this down. We got a harmonic cluster and the bottom of the 4-hour rotation zone right there. To the upside, it's still 390.80 and 392.07 is 392.51. The Qs, again, slight gap down. Overhead resistance 276.50. Key support right around 272.70. Why this level? We've got price rejection from it before. Key close, move away, or retest that key level area. I mean, it's a cluster about 272.35 to 272.70. I'd be focused on 272.70, and we break that 270.53. So that's it to the downside. To the upside, we're going with the emotional candle close right here. And it's verified with some key closes right here. That's a minor significant level, 279.85. And then this level also has to go up to about 282.55. So that's the upside and downside. Let's see. Again, I'm going to repeat this. Doubles or any pattern, the higher the time frame, the more significant the pattern. And generally not a blanket thing because some probabilities are pretty close. But as a general rule of thumb, the higher the time frame, the higher the probabilities. A general rule of thumb. It varies by major market group. It varies by stocks versus futures slightly. So if I was going to bet on a 1 hour or a daily pattern is going to supersede a 1 hour pattern. Gensler chest pounding SEC notch record and going after the little guys, not the big guys. ES, is there still a potential 4-hour double bottom? Sorry, I'm focusing so much on. You can look at it. If it gets above, yes, it's still a potential 4-hour. It's going to be really challenging to trade because, and it could be invalidated before that. However, because you're going to need a 4-hour close. Unless that closes above before the Fed meeting, you're going to just have to trade a breakout level, and you're better to just trade it. It's into the clear path move anyways. It would just be an upside breakout level. I'll put it on the chart. Yes, that is still technically valid, but it would require, remember when it's not valid on the lower time frames, because this is turned into now a triple on the 1 hour. What does that mean? You can still say, yes, well formed on the 4-hour. It needs a 4-hour close. By the strict rules, it needs a 4-hour close. You could front run it by a 1-hour close. The problem is you're going to have volatility. So you could use these targets for volatility levels. See, and everybody thinks something, and that's why I got to trade the patterns. I don't even trade what I think. I trade what have to trade what the patterns say. Thank you, Gary, for the super sticker. Yeah, we should. That's why we have and remember, when you have conflicting patterns, you could get a pullback and then continue the bullish pattern. You can trade patterns within patterns. I'm trying to more use this as a teaching tool. If you're a long-term trade or a very long-term trader, I'd still be in bullish mode because that's where the bullish or in bearish mode because the signals are for bearish mode long-term. Short to medium, very short term, it's in bearish mode. Medium term, it's in bullish mode. So it all depends on your structure. For newer people or for people very long term, you're not going to trade this crap. This is going to be a blip on the radar screen overall. Notes. Let me get to key things since I got through things people really need. Nothing. You still have the potential breakdown pattern, which is a double top that is not confirmed. Would need a close below 110.22.5, 109.24, 109.13.5, 109.3.5. On a rally, where would I be focusing on? The 75, because that would turn it into a triple, which is 111.18, or a close back above. If it confirms, then a close back above 111.12. Dollar index, everything's just waiting. Dollar index, outside day yesterday, inside day so far today. So yesterday's high and low are what's key for me. VIXY. Yes, where are my lines? Where'd my VIX lines go? Oh no. Am I still on? I hope we're not frozen. Let me see if lines come up on there. I don't know what's going on with my VIX. But we do have a little potential double, and we still have the triggered double top that we're in. I don't know where my lines are. And we have the little double bottom. That is not triggered. We just put the lines back on. Don't know where they went. I'll fine tune those later. Unless this double, if this double triggers, then I'll stay longer term in short term in bearish mode. Why? That could just be a revisit of the 2850 area and then the next rollover play to the longer term targets in the VIX. Crude, still rejecting after that first stop loss target. Is this a double? Let's check on the 4 hour. And it is not. So a break below this key point goes into not anything to clear past. So virtually there's no breakdown trade. It's only managing the long trade that's hit the stop loss levels. So nothing's changed with crude. Just peek in at the currencies. Yen pulling back with some dollar weakness right now. Nothing much with the jawboning last night from the Bank of Japan. Euro inside day from yesterday. Everything's going to depend on the Fed. Pound still holding up at key support. Bitcoin still holding at key support. Still potential double top that's not confirmed is still in place. That's the only thing I'm watching the downside. Other than that, breakout, still the upside, 28.27. Tesla, remember, did not trigger the double yesterday. Slight little gap play into the open. Key support coming in between 218 and roughly 213. Close below 213 favors a retest of the lows. If it does, if you get massive volatility upside with something with the Fed announcement, 224.65 could still be a target that can be utilized intraday because if we got massive volatility upside, it would trigger that double. And then your next major target is 249. So, yeah, thanks for shouting out Gary the golfer. Yeah, Paramount down was big, down big. I have a and I wish, I can't trade vibes. I'm just getting volatility. So I don't. Let's just peek at Paramount again. This is something that's going to be. This is not a time I'd recommend over trading going into the Fed meeting. If you don't have anything to do, sit on your hands. Here's that Paramount, 1697 after the big miss. Remember, this is a great little area. If you were using the overall, this is where first of all you would have used reverse. It's below 1739. So when something gaps below that on any rally attempt, 1739 can become resistance. Why? When it gaps through a harmonic, that's it. And then the next key levels you would have utilized would be the forward harmonics, 1673. Just trying to teach something. Oops, hit the wrong button. So that is how you can use some of the levels. So on key support, on a push down to the open, I'd be watching that area. We have not hit it yet, but you can see the reactions even overnight at this key, or sorry, this morning at the key levels. Now it looks like we are open. Oops, let me change something. Back to regular trading hours. Let me just peek in at this. Again, I'm not even going to go over to micro levels. It's, you can, longer term people can already spot the thing, but this is a time you don't want to get chopped up unless you're already in a more substantial longer term pattern. Since there's nothing, slightly negative tick, but very non-committal tick so far. Where are my lines gone? Where did my lines go? Does anybody else have disappearing lines from their charts? Who stole them? All right, remember on a push down, watch between 1,000 and 1,200. And then at this point, since it's not down there, my pivot point is 0 to watch for. VIX slightly up. Makes sense with that. Slight roll down. So again, watch, here we go. Watch the double targets to the downside. But I would not count on multiple hitting before the Fed announcement. But those are the targets. Let me just review them. Then I'm going to have to jump 38.46, 38.33, 38.20. All right. That's where we sit. Everybody be safe. If for some reason I can jump on, or if there's major stuff before the Fed meeting, I will let people know in Discord. All right. Patrick, thank you. Line's gone on some charts. The Hamburglar stole our lines. Maybe TradingView has given the government access to censor your lines like Facebook did. Then Elon, you know what? We should have Elon take over TradingView, and then he can restore order. I'm being sarcastic. To the TradingView, our lines are being censored. Any bearish lines are being censored. It's bull mode only through the elections. So, oh, please, Sterling, please. Yeah, you know how to rile me up. And what I have the tie-dye dark side of the moon prism shirt on today. So, will it be a dark side of the moon or not? Stay tuned. We will find out. Oh, look at that. First target hit. First target hit. There we go. There we go. Hey, you know what? If we sell off into the announcement, that technically favors more of a rally mode. If you look at some analysis. All right. with that little bounce off that first target, the random first targets. I will chat with everyone later. You got to admit that it has been nice seeing context warnings on Biden's dribble on Twitter. You know, we'll just see what happens. I'm just tired of the government. The government being in any social media platform trying to control the narrative is scary from any side. I just want the government out of this crap. Oh, look, there goes some more lines disappearing. Gary, anything can change in a minute. It's going into the Fed meeting. You're already bouncing off the first target. It could come up and chest some upper targets. We'll see. It's going to be volatility. Sorry, that's the only prediction. Volatility, by the way, if it pushes much lower, the potential 4-hour double would be off. Government out. Agreed. With that, I shall talk to everyone later. Have a safe, prosperous trading day. If you don't have a trade, this is a great day to sit on your hands and watch and learn, and do not force anything. Bye for now.